Datadog is one of the most interesting cloud software companies in the market right now. And after its latest earnings report, I think the bull case got stronger. But before we talk about the stock, let's quickly explain what Datadog actually does. Datadog is a cloud monitoring, observability, and security platform. In simple terms, it helps companies understand what is happening inside their apps, servers, cloud infrastructure, databases, logs, networks, security systems, and now AI workloads. If a company's app slows down, breaks, gets attacked, or starts costing too much money, Datadog helps engineers find the problem faster. That is why Datadog is important. The more companies move to the cloud, the more complex their systems become. And the more complex those systems become, the more valuable Datadog becomes. Datadog makes money mainly through a subscription and usage-based model. Customers pay based on the products they use and how much data they send to Datadog. So when customers monitor more apps, send more logs, use more security tools, or add AI observability, Datadog can make more money from the same customer. That is a powerful business model, and we can see that in the numbers. In Q1 2026, Datadog reported revenue of $1.01 billion. That was up 32% year over year. This was also the first time Datadog crossed $1 billion in quarterly revenue. That is a major milestone. Even more important, growth accelerated from 29% last quarter and 25% in the year-ago quarter. For a company already doing over $1 billion in quarterly revenue, growing above 30% is very impressive. Datadog also ended the quarter with about 33,200 customers, up from about 30,500 a year ago. And it had about 4,550 customers with annual recurring revenue of $100,000 or more. Those large customers generated about 90% of ARR. That tells us Datadog is not just adding customers, it is also growing with bigger customers. The platform strategy is also working. 56% of customers now use 4 or more Datadog products, 35% use 6 or more products, and 20% use 8 or more products. That matters because the more products a customer uses, the more valuable Datadog becomes, and the harder it is to leave. Datadog is not just selling one tool, it is becoming a platform. Another strong part of the report was free cash flow. Datadog generated $289 million of free cash flow in the quarter, with a 29% free cash flow margin. That is very strong. This shows Datadog is not just growing fast, it is also generating real cash. The company also reported non-GAAP gross margin of 80.2% and non-GAAP operating income of $223 million. So this is not just a revenue growth story. Datadog has strong growth, high margins, and strong cash generation. Now let's talk about the biggest part of the story, AI. Management talked about AI in two ways. First, AI for Datadog. These are AI tools that make Datadog's own platform better, like Bits AI, Bits Assistant, and Datadog MCP Server. These tools help developers and security teams investigate issues faster. Management said Bits AI Security Agent can reduce investigations that may take hours down to as little as 30 seconds. That is a big productivity improvement. Second, Datadog for AI. This means Datadog helps customers monitor and secure AI workloads. This includes LLM Observability and GPU monitoring. That is important because AI applications create a lot of complexity. Companies need to track performance, errors, latency, infrastructure usage, GPU efficiency, security risks, and costs. Datadog is building tools for that. Management said more than 6,500 customers are sending data for one or more AI integrations. That is only about 20% of total customers, but those customers represent about 80% of ARR. That is a very important signal. It means Datadog's biggest and most valuable customers are already using AI-related parts of the platform. AI usage is also growing quickly. LLM Observability usage nearly tripled quarter over quarter. MCP Server tool calls quadrupled. Bits Assistant messages increased by 12 times. This tells me AI is becoming a real growth driver for Datadog. The company also landed major deals with AI research divisions at two of the world's largest technology companies. These customers are using Datadog to monitor advanced AI training workloads and GPU infrastructure. That is a big deal. If Datadog becomes important for AI infrastructure, the long-term opportunity could be much larger. Now let's look at guidance. For Q2 2026, Datadog guided revenue between $1.07 billion and $1.08 billion. That represents 29% to 31% year-over-year growth. For the full year 2026, Datadog guided revenue between $4.3 billion and $4.34 billion. That represents 25 to 27% growth. So the company is still expecting strong growth for the rest of the year. Now let's talk about the risks. The first risk is valuation. DDOG is a high-quality growth stock, and high-quality growth stocks often trade at premium valuations. If growth slows or investors become more cautious, the stock can fall, even if the company is still performing well. The second risk is usage-based revenue. This model is powerful when customers are expanding, but it can create volatility. If customers reduce usage or optimize cloud spending, revenue growth can slow. The third risk is competition. Datadog competes with other observability platforms, security companies, cloud providers, and open-source tools. Datadog is clearly winning, but competition is still real. But here is the bull thesis. Datadog is growing revenue above 30%. It crossed $1 billion in quarterly revenue. It has over 33,000 customers. Large customers are growing. More customers are using more products. Free cash flow is strong. Gross margins are high. AI usage is accelerating. The company is landing major AI customers, and guidance remains strong. To me, Datadog is one of the best-positioned software companies for the next phase of cloud, AI, and application complexity. The world is not becoming simpler. Companies are running more software, more cloud infrastructure, more AI applications, and more security systems. That creates more need for monitoring, observability, and automation. And that is exactly where Datadog fits. So here is my final view on Datadog. Right now, software companies are being judged through one very important question. Will AI disrupt this business, or will AI make this business stronger? And for Datadog, I think the answer is clear. Datadog looks like a company that becomes more valuable because of AI. AI creates more applications, more code, more cloud usage, more infrastructure complexity, more security risks, and more data that companies need to monitor. That plays directly into Datadog's strengths. The company is already benefiting from AI through products like LLM Observability, GPU monitoring, Bits AI, and Datadog MCP Server. So to me, Datadog is not a software company being threatened by AI. It is a software company that could become even more important because of AI. That said, valuation still matters. DDOG is a high-quality company, but the stock is not cheap. And after a strong move, I would personally wait for a pullback before buying. But there is no question that the company looks very interesting. Strong revenue growth, high margins, strong free cash flow, growing product adoption, and real AI momentum make Datadog one of the cloud software names I would keep on my watch list. So my view is simple. I like the company. I like the long-term story. But at this price, I would be patient and wait for a better entry. Let me know what you think. Are you bullish on DDOG? Or are you waiting for a pullback too? This is not financial advice. Always do your own research before investing.